What if the biggest edge in trading isn't your strategy, isn't your indicator, isn't your entry? What if it's something you can't even see on a chart? Two traders can have the same strategy, the same market, the same entry, and the same risk. One makes money consistently. The other destroys their account. So what separates them? Their psychology. And there's one psychological shift that can completely change the way you trade. The trader who needs to be right. Most beginners enter a trade with one hidden expectation. This trade needs to work. That sounds harmless. But think about what happens when the trade starts moving against you. You don't want to accept the loss. You start looking for reasons to stay in. Maybe it'll reverse. The support is still there. I'll give it a little more room. Suddenly, you're no longer managing a trade. You're defending an opinion. And that's where psychology begins to destroy your strategy. The psychological edge. Here's the psychological edge that changes everything. Stop needing to know what happens next. That's it. You don't need certainty. You need a process. Think about the difference. A beginner asks, will this trade win? A disciplined trader asks, if this setup appears, am I willing to take the risk? One trader is searching for certainty. The other is accepting probability. And the second mindset is far more sustainable. Why losses stop feeling personal? Once you stop needing every trade to win, something incredible happens. Losses become information. A losing trade doesn't mean I'm a terrible trader. It means this outcome occurred within my system. That's a huge psychological difference, because now you don't need revenge. You don't need to immediately make your money back. You don't need to change your entire strategy after one bad trade. You simply reset and wait for the next opportunity. This is one reason experienced traders can remain calm, while beginners become emotional. They don't expect certainty. They expect probabilities. The real secret. And here's the part most traders completely misunderstand. Confidence doesn't come from winning. Confidence comes from trusting your process. If you only feel confident when you're profitable, your confidence will disappear every time you lose. But if your confidence comes from knowing, I know what I will risk. I know when I'll enter. I know when I'll exit. I know what I'll do if I'm wrong. Then a single trade can't control your emotions. Trading psychology author Mark Douglas emphasized this probabilistic mindset. Traders become more consistent when they stop demanding certainty from individual trades and focus on executing their edge. How to build the edge. So how do you develop this psychological edge? Before every trade, ask yourself 3 questions. Number 1, what is my maximum acceptable loss? Number 2, would I still take this trade if I knew it could lose? And number 3, am I following my plan or trying to prove I'm right? If you can honestly answer those questions, you're already thinking differently from the average trader. You're no longer trying to control the market. You're controlling yourself. Closing. The psychological edge that changes everything. Isn't confidence that your trade will win. It's confidence that you'll be okay if it doesn't. That's freedom. Because once you stop needing every trade to work, you stop forcing trades. You stop chasing. You stop moving your stops. You stop revenge trading. And you start executing. Remember, you don't need to predict the market. You need to prepare for uncertainty. Because the strongest trader isn't the one who knows what's coming. It's the one who remains disciplined, no matter what comes next. Subscribe to Mind Over Markets, because the biggest edge in trading is often the one between your ears.